It's about that time of day again. Welcome to your nightly newsletter, boys and girls. Joseph James here. It's Thursday evening, June 9th, 2016, wrapping up this second full week of the month of June. Hope you had a great week with us so far. Got another exciting newsletter for you guys tomorrow. Another big day ahead of us on Friday. It's Rollover Friday tomorrow with some very important clues coming early in the overnight session. So when they open up here in Asia, there are going to be some very important clues happening in the short term. Crude and Euro are both bearish, while gold and the S&P are bullish as we head into Rollover Friday. Got a great video for you guys. We'll check the calendar. We'll look at our charts and get some strategies put together for tomorrow. But before we jump into it, though, I do want to remind you, the only place to watch the full-length version of this trading newsletter is on our trading blog here at sidewaysmarkets.com. If you're over on our YouTube channel right now watching the YouTube version of this, it's just a small portion of the video. Make sure you go into the description of the YouTube video, follow that link, and come join me over here to watch the full-length version of our nightly newsletter. While you're here, don't forget, grab a free pass. Come out and join me in the trade room as a guest next week. Grab your free pass. If you're not a member here at School of Trade and you'd like to join the trade room, upper left-hand corner. Also, don't forget to register as a member of our mailing list. I'll send you an email every evening when our nightly newsletter goes live. All I need is your name, your email address, and I'll send you an email every evening, usually right around 7:15, 7:30 p.m. Eastern Time when the newsletter's ready. Right below tonight's video, you'll see a spot to download all the charts I'm using in the video tonight. Grab your charts below the video. And of course, over on the right-hand side, don't forget to register as a trial member here at SOT. You're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And remember, I'm always standing by here to help you guys out 24/7, 365 to answer all your questions. Lots of great questions to ask. If you got any questions for me, use that live support button over on the right-hand side of the website. Wrapping things up tomorrow with Friday, June the 10th. Wrapping up this second full week. Next week is quadruple witching. We'll talk about that in Monday night's newsletter. You do not need to worry about quad witching until middle to late week next week, so just be aware of that. But next week is the beginning of what is known as quadruple witching. You can learn more about that on our website at schooloftrade.com. Before we get to Monday, though, we got to talk about what's happening on Friday. Before we get to Friday, let's check out what's happening coming out of Asia. No major news here tonight. No major news. We got some small news coming out of the producer price index from Japan, but really all eyes tomorrow will be moving into the U.S. session. Really nothing big out of Europe tomorrow. We got 2 o'clock, 2:45, 4 o'clock, 8 a.m. Not a lot happening here. Not a lot happening. It's not going to be until we get to 10 o'clock tomorrow morning with that consumer sentiment number. There's really no major market moving events starting out tonight in Asia and all the way through tomorrow's session. We have the Treasury budget tomorrow afternoon, which, tomorrow's a Friday, so it's going to be early in, early out to begin with. Remember, Fridays are days where you do not want to be entering into new positions after 11 a.m. on Fridays. The volume dries up. And also remember, at the end of the day, at the end of the week, at the end of the month, at the end of the quarter, and very much so at the end of the year, traders take bigger risks. Why do they take bigger risks? Because they're either trying to dig themselves out of a hole or they've got money burning a hole in their pocket. Either way you slice it, the end of the week is always expected to be a time where there's lower volume and bigger risk taking, not on my part or your part, but on the average trader in the market, which means you have a lot more spikes up, spikes down, and really kind of unreliable price action. So the word of the day tomorrow is early. Get in early, get out early, and I think we're going to have a great session for tomorrow. It's been a little bit choppy, a little bit slower volume this week, so hopefully I've been saving the best for us in tomorrow's Friday session. Don't forget, we'll do it all together with all of our students tomorrow at 8 o'clock Eastern Time in the trade room. Let's jump into our charts here. We got crude, S&P, gold, and the euro this evening. Crude is bearish and trading inside a triangle this evening, which tells the sellers to look for traps at the highs and targets back at the lows as price retreats back to the old $50 round number tomorrow. Boy, after an excessive move coming off of Chinese data last night, remember last night we talked about having a big bull market and we're looking for a deep pullback. We got the deep pullback, but it never rebounded. And of course, once we saw these buyers trying once, trying twice, when we came in tomorrow morning, we pretty much knew this was nothing more than a bear market, unfortunately. Eventually, right, we have to give up on the buy side here. Once they try once, try twice. You pretty much knew once those buyers tried after a few times there. Remember, when we have a bull market we saw yesterday, right, that bull market we saw yesterday, what we're doing is we're waiting for it as it pulls back to see these sellers fail. And so if they're not going to fail on us, we've got to follow that direction, right? So again, once they tried once and they got it, they tried twice and they got it, then you know where we're going, right? You know you're looking to the downside. So hopefully nobody got trapped on the wrong side of the market. Like I said, the whole process starts with a failure into strength, into pullbacks, and then back up, right? If we don't get the failure, then we, of course, have to trade in the direction of those sellers. They got their double down. They got their trap high. They got their trap high. That's pretty much what you're looking for when you have a strong bear market. And what was amazing with this is that we saw the buyers try to keep pushing this price higher, but it feels like inevitable right now. This market is going to find its way back to that $50 a barrel, which, by the way, is pretty much what we started off the week to begin with. Run it up, bring it back down. I wouldn't be surprised if we head back to 48, 47 right before coming back up to $50 a barrel. So right now, that's the way the ball is bouncing here right now. We're going to trade the chart tomorrow, no matter what we think is going on. And right now we can see here the buyers desperately tried to keep this thing up, but they've got nothing above the moving average. They're unable to get anything going on right now. We have to follow the trend right now and keep looking for selling opportunities. This is a definite bear triangle. There's a few different ways you could draw that triangle. If you look at this, again, there's a few different ways you could draw it. It really fits better as just a beautiful triangle, right? I mean, this is like, what is it, an isosceles, right? Exactly perfect triangle there. Very, very well-behaved triangle, as you can see. And whenever we have a triangle is pretty much exactly like a trading range. It's just a narrowing range. You want to sell those highs and buy those lows. When I say buy those lows, you want to be taking your profit off at those lows. So as we stand right now, the bear triangle is the first big clue we see on it. The bear triangle tells the sellers to be looking for traps up above these highs. Again, failure into strength, strength into pullbacks, and then back down. Again, traps above 50.69, traps above 50.87, 50.90. And of course, the battle zone waiting for tomorrow is going to be up around that 51 to 51.15, right? That'll be our battle zone for tomorrow. Buyers, you're really going to be careful if you're looking to buy below the battle zone. Once we can get and stay above that battle zone, then we know we can definitely rely on some buying opportunities, and the target will be back up at the high. Remember, this is a longer-term time frame. We're going to be opening up our trade room tomorrow morning, and we're going to use 1/5 of this time frame to look for short-term, intraday scalping opportunities, right, to get those nickels and dimes and, right, adding up to dollar bills tomorrow in the trade room. So this, of course, gives us an overall direction of this market. We'll be looking for price. Sellers, of course, looking for traps above those highs, traps above those highs, traps above those highs. If we can get through this area and then hold a pullback, then the buyers can be looking for, right, that target back up to that high. As this price goes lower, be aware, buyers, you may have some lower reliability opportunities off of those lows. Again, because this is just, in all reality, one big trading range. So where the sellers are looking for selling opportunities off the highs, the buyers are definitely going to be looking for buying opportunities off the lows. Sellers will take their profit at the lows. Buyers, of course, now have a measured move to work with coming off of that most recent swing, and that means you'll look for that test the measured move, a two-legged correction, and then back down to that double bottom before we go down to the $50 a barrel, or before we reverse back up. Remember, measured moves are very important clues for us. We expect to see the measured move hit twice, once on the first test, then a two-legged correction back above prior areas of resistance, where we do expect sellers to return the favor and send it back to that measured move. Once we get to that second test of the measured move, then it's really anybody's ball game right there. We do then expect to see profit taken from the sellers, a possible reversal, or if it did like it did this morning and blows right through that measured move, then we go looking for a triple measured move, which will probably because it's a Friday, finish up somewhere around that $50 a barrel level. All right, so bear market, sell those highs, take profit of those lows. If it does go down to those lows, buyers, make sure you're careful to wait for proof before you go trying to buy those lows, because we do know this is a bearish market. And remember that double bottom into that measured move before we expect any type of reversal or continuation tomorrow. We're going to trade this together tomorrow with all of our students in the trade room. Come out and join us. Moving on here right now to the S&P. The S&P is bullish and trying to finish a measured move back to today's highs. There's a big bullseye right now on that 18.5 area, that high of day from today. We have a wedge on the chart, which tells the buyers to look for traps below recent swings. We're getting one right now for the most reliable buying opportunities tomorrow. First of all, tomorrow is rollover day on the S&P. It's always a little bit difficult in my shoes right now because it's the night before. So right now, volume is expected to be greater on the 9/16 tomorrow, but we will be trading the 6/16 until proven otherwise. So as of right now, we do have rollover day scheduled for tomorrow. We are going to move with the volume. So once the volume is higher on the 09/16 contract, then we'll move to the 9/16 contract. Just a heads up, the price on the right-hand side will be a little bit different. Okay, remember that you pay a premium for the price in the future, so it'll typically be a higher price going into tomorrow. But most important thing is that it should be the same basic technical clues going into tomorrow. So if we do have rollover to the 9/16 contract tomorrow, which I do anticipate, make sure you check the volume tomorrow morning. We'll be doing it in our trade room with all of our students at 8 o'clock Eastern time. So we'll know with all of our students tomorrow. But as soon as that volume is trading higher on the 9/16, then you know it's time to roll over to that 9/16. The price will be a little bit different on that 9/16, but we do expect, though, for the overall structure of the market, the overall technical analysis to be very, very similar on that 9/16. The next thing is going to be this bull wedge. The bull wedge is definitely a big clue here right now. Beautiful bull wedge on the chart here. Higher lows, higher highs. You get a measured move target up top as well, and a wedge target. And coincidence? It's sitting right at that high of day right now, which means combine the measured move, A, B, pulls back to C, up to the area for D. Combine that measured move along with the bull wedge, and you really could draw that wedge even right off those lows as well. The bottom line is there is a big bullseye up at the high of day for today. And of course, a bull wedge tells us look for traps, prior swing areas, prior areas of resistance. What are we looking for again? As the price pulls back, we're looking for sellers to try to sell it. If they're successful, we keep waiting as buyers. If they're unsuccessful, though, we're waiting there. Second long off the low, seller failure off the low, seller failure into buyer strength. Right? What's going to happen if sellers get caught trying to sell into the support area? They're going to get stopped out. What happens when sellers get stopped out? They buy their way, right? They cover their short positions. That means we should see buyers pushing strong here with strength. And then, of course, the next pullback, we go failure into strength, strength into pullbacks, and, of course, pullbacks back up to targets overhead. That's the rule of thumb when it comes to a bull market, and with a bull wedge, we know exactly where that target is overhead. It may also be a spiking channel. As you can see, I have that listed here as well. Kind of drew that spiking channel out just because it will probably use this as an excuse to find some support as well. So seller failure into strength, and back up we go. As we pull back to the low of the spiking channel, sellers try to sell it short. If they're successful, we wait. Right? If they're unsuccessful, though, trying to sell it short, if they can't keep it below that trend line, then we know, of course, that's going to be our green light here for that failure back up to that high. Just a heads up on that resistance trend line coming down off the highs. This will be your short-term target, long-term target, and, of course, runaway target will be that double up for tomorrow's session. Measured move target, double up target, resistance trend line target. What else can we talk about here? Well, obviously, this is going to be the battle zone for tomorrow for these bulls. Buyers will be trying to buy into it. Buyers trying to buy into it. If we can get below and stay below, I talked about this last night on the newsletter for gold. What I do not want to do is try to sell the breakdown below this 09 3/4, because that's going to be a great spot for a long-term buyer to enter. What I'm looking for is for price to break through it with strength and then close after.